Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again at the gold market. So you could see what has happened yesterday in the gold market, and now probably you better understand why we said that despite the daily chart looks really bullish, it would be better to wait and see what will happen. Just because on the intraday charts it was, well, really tricky trying to catch the direction and trying to step in a market action that we've got. Besides this rally, well, on the gold market, maybe it has some additional background, as we discussed this in our weekly reports. It's a lot of other factors except the Fed that now is making an impact on the gold performance, and just explains why it shows significantly stronger upside reaction and better resists to bearish factors. And strength of the United States dollar, Fed pulse, some statistics from the United States, and so on. Yes, maybe, but now we're speaking about the Fed, in particular recent Fed action, and we suggest that this is temporal effect by the two reasons. First of all, Jerome Powell said nothing new except maybe hint on a revision of the quantitative tightening, so that maybe the volumes of the bonds buyback might be, bond selling out of the balance might be decreased. So, and second, why we think that this is a temporal effect is that from the statistics that we have in overall situation in the United States economy, problems with the deficit and some other indirect signs that we discussed week by week, doesn't suggest starting of the rate cut right now. So this will happen really fast. And the turning point might be as soon as in June, just because currently the common opinion is that somewhere in the beginning of the summer, Fed has to start cutting rate. Yes, already, although investors now start watching just 2-3 rate cuts, except 6th one that they suggest should happen in the beginning of the year. But still, they think that the first rate cut should happen in the same points as they thought before. So we think that this doesn't correspond to real situation in the market. And this suggestion led us to expect downside continuation, for example, on the Forex market, on the euro currency. On the gold market, performance might be different. But speaking about particularly this factor and the Fed policy, we think that market definitely is overestimating what really Jerome Powell has said yesterday. So as a result, you can see great spike up. Actually, the bullish pattern has worked perfect. We have the upper breakout of the pennant. Market slightly hasn't reached the daily overbought area. Signs of the bullish dynamic pressure has worked also perfect. But as a result, we've got the grabber on the top. Appearing of the grabber here is absolutely reasonable. Recall that just recently we talked about potential upside target, and we said that if you're taking the long position, try to use the previous top as a target. Here we have more extended action just because of the significant event in the market. But in general, gold now technically is limited in upside action. If you take a look at the weekly chart, you could see that once again it hits the weekly overbought and now shows some pullback. At the same time, depending on what direction you would like to trade, if you're a scalp trader, you would like to go short, here's two options exist. First one, you could try to deal directly with the grabber, suggesting it will work and market will drop below these lows. Or of course you could combine both ways, as you will see. But this is the first setup. You could try to use the grabber directly, try and take position as close to the top as possible, just to minimize risk. Also, don't forget that in general we have bullish context here. So from that standpoint, as minimum risk you will take will be all the better. Or you could consider on a fall time frame chart possible larger pattern that might be formed. You consider that upper direction was precisely to the 161 in extension. This is very typical for the hand and shoulders pattern. If market starts showing some response on the resistance that we have and starting forming of this hand and shoulders pattern, later you will get another chance for position taking, and it will be based on the clear pattern. So grabber is also really cool, but this is just single session pattern, so it is not extended, it's just pattern of the 1 day. While here we have just more traders involved in the process of the selling of the gold, starting forming the hand shoulders pattern, so later we could get another chance. Now it's just only the question, would you like to take the position of the grabber or not? If you still would like to do this, here you could watch for 2216 area. Potentially it might be the Gartley steeple to sell. It's a bit ugly, not really perfect, but market could try to form it. Very often when the gold starts reversal, it started from with a Gartley steeple to sell pattern. This is the specific of the gold market. At the same time, here you could easily identify, especially on the hourly chart, this narrowing triangle, right? So here we have something like this. So either from the top you could draw it, or draw it from the B point. It really changed nothing. And this tight consolidation, it's, well, has a bullish feature. That's the risk factor that you will meet if you would like to trade based on the grabber and with the OP. At the same time, if you take position at the 2216, your stop will be 2225, 2223. It's very tight stop order and very small risk. So from that standpoint, you could think about it. Concerning long position, now it is a bit difficult decision, just because market is calling around the overbought once again. Whether this retracement will be formed or not is difficult to say. Of course, if we will get this hand shoulders, market will show downside A, B, C, D will complete it and will drop to the 21 even. Obviously, this will be the point to consider taking the long position. But right here, around this area, on the fall time frame chart, on the daily chart, for now, especially when we have this grabber in place, I do not see yet the new good opportunity for taking the long position. It seems that it would be better to wait and see. Returning back to the trading plan on Monday, if you take a look what has happened, I just will drop back to the hourly chart that we have traded. Here market has completely, if you remember, we started our analysis right there where we're considering this ABCD pattern to the upside, and we said, take a look, we have the grabber, if you remember, on the fall time frame chart, and we said, take a look, market could form some kind of the ABCD with this point. And actually everything was really great and natural according with the technical analysis. Market completed the OP here, started dropping, and that's the point where the Fed intrudes in the process. And this is the reason, guys, despite that our suggestion and technical conclusions were correct, patterns indeed had been formed, market started downside action out from it, so everything was great. But that's why we're every time we warn about these important events and prefer not to trade when they are coming. So that's our couple of suggestions and thoughts on the gold market. Hopefully this will be handy to you. Let's see what will happen.